Hello, friends, and welcome back to Market Shares. I'm your host, Tony Blodgett, and I've spent the last couple weeks or so traveling around and going to different sales rallies and talking to a lot of loan officers, producers, people in the mortgage space. And I thought I would share today a little bit of the message that I've been talking about when I get to talk to these loan officers, and I thought it might be something that might resonate with everybody. So, this is a topic that's really something I'm extremely passionate about. I mean, as a mortgage professional for 27 years, really been in the industry. I worked for an escrow company delivering documents. I was a courier 30 years ago. So been around this industry for a very long time and originated for many of those years. And, when I have a different passion, I think, around originating loans. It was never transactional to me. It was always about building relationships. And I learned this on very early in my career that, our goal is to help as many individuals and families as we can with great advice. And sometimes that turns into a transaction, and other times it doesn't turn into a transaction. And I try to convey this message whenever I get the chance to, but I had an example that I wanted to share with you. For those of you that watch this podcast on a regular basis, a few months ago, I had a little flooding issue at my house, and my sump pump failed, and I talked about the insurance challenges with talking to my insurance company about that, but it also ruined my heating and air conditioning air exchanger, right? Or whatever that thing's called. I'm no HVAC specialist, but I want to tell a little story that I think is going to parallel very well with the mortgage industry. And I had reached out to a company that I had worked with for many years. Matter of fact, they had done work at my previous home. They had done work at my current home. It was the company that I kind of had an ongoing maintenance arrangement with. So I would say that I had, a relationship with this company who had done multiple transactions for me and supported me over the years with my heating and air conditioning needs. And after, my unit flooded, I figured I should probably have this checked out. It was completely flooded with water. And I'm like, I don't know if this unit is even, can it be repaired? Does it need to be replaced? What's the deal? So I had a gentleman come out to my house and, nice enough, we exchanged pleasantries. He asked me where the unit was, and it was down in my crawl space. So he went down there and took a look at things and, did his inspection, if you will. And after a few minutes came up and said, okay, well, I've taken a look at everything that I need to look at. So I'll work up an email and I'll send you an email. And I'm like, okay, sounds good. And I didn't really think much about it. And then it took a couple days, and a couple days later, I get an email. And kind of like this guy's, good faith estimate, right? Let's use a mortgage term. It was like a good faith estimate that I got just emailed to me. And it was $18,000 for, what they recommended for my repairs for my heating and air conditioning unit. Now, I was completely taken aback by this. I had no thought that it was going to be that expensive. Matter of fact, I thought maybe the unit that I had could just be repaired. Maybe there was some minor damage. I thought perhaps maybe there wasn't any damage. I didn't know, but I got an $18,000, estimate. And I immediately was like, oh my God, I need to get a second opinion. This is crazy. Like 18 grand, I'm like kind of furious. And so I reached out to a friend of mine who I know is in the heating, air conditioning space. And I said, hey, would you be willing to give me a referral to one of your salespeople? Because, I just got this crazy, bid and I need a second opinion. And so he said, yeah, of course. And so he referred out a gentleman who came to my house. We scheduled a time. And this guy was really nice, really friendly, really personable. He stopped at my front door and, put on the little covers on his boots, to make sure he didn't get my house muddy and dirty. And said, hey, you want to show me the unit? Maybe you can walk me through what your concerns are. And, kind of invited me to go down with him into the space. And I said, yeah. So we went down there and I kind of showed him what had happened and the flooding that took place. And he said, okay, well, it's possible that your unit just needs to dry out, and you may be even able to just keep this unit in its current situation. Here's a few things that you might be concerned about once they get flooded with water. These heating elements can corrode and cause problems, and so on and so forth. So he talked me through what it would look like if we did a repair instead of a replacement. And then he did not only tell me that, a replacement might be necessary, but that unfortunately, because they've changed the way that these units work, the outdoor unit, the big heat pump, wouldn't be compatible with most of the new furnaces. He goes, so if you got a bid and it was $18,000, it was probably to replace both units. And here's why. Here's why that would be necessary. Kind of talk me through it, made me at least feel a little bit more comfortable about what it might, the reason behind it. But he also said, sometimes we can find these older units, and maybe I can find you an older unit to replace your air handler, and you could keep your existing heat pump. I'll do some research on that for you, so on and so forth. And so he did that. He did some research. The next day he called me and we talked through the different options on what we might do. Now, I will tell you that replacing everything with this company versus the first company was still $18,000. It didn't change the price at all. But how do you think I felt about that experience? I felt like this person not only really, cared. Matter of fact, he talked about solutions that wouldn't even need me to buy a new unit at all. We talked about repair options. And, I tell you this story because to me, it's very similar to the process that our borrowers go through when they're looking to get their mortgage. And you might say, how is there any parallel here? Because look, this guy gave me an experience. This is a guy wearing coveralls, who's crawling under my crawl space in my house, but yet gave me a feeling of education and options. And even though at the end of the day, his price was the same, I felt so much more comfortable with why it costs what he had sent me. And so many times as loan officers, we talk to a borrower and we treat them like that first guy treated me, right? We just take their information and we work up an estimate and we send them a fee worksheet and we say, this is what it's going to look like. And what do you think their reaction is? I mean, oftentimes it's probably just like mine was with the HVAC. They look at it and they're like, holy crap, right? They don't understand what all these numbers are. They don't understand that, maybe some of the things that are shown on there might be credited back, right? And it might be paid for by the seller. Like there's things going on that they really need to understand better, but yet so many loan officers don't take the time to do that. And what I want to recommend, and this is not something you've never heard before, but I would ask you to really take inventory of your process with your borrowers. And are you truly consulting them on what it is that they're trying to accomplish? And when I think about consulting someone, it really is impossible to give someone great options without really slowing down the process and being willing to ask them a lot of questions about what they're trying to accomplish. And what we tend to do a lot of times in the mortgage business is we let the customer drive the conversation, right? They might reach out to you, and especially if they've already been pre-approved. So let's give an example. You have a borrower, they've been pre-approved, they're a golden borrower, but they go to look at homes and they meet your agent, an agent that refers you a lot of business. And the agent says, look, you should really give Tony a call. I know you're pre-approved, but I highly recommend him. You should give him a call. So let's use as an example, right? So what happens is borrower calls you and they're like, hey, Susie told me to give you a call. I'm already pre-approved. I have perfect credit and I have $100,000 to put down. So I just wanted to see, if you can beat the rate that I have available through my credit union or my bank right now. right? How many people have gotten a call like that? And immediately, a lot of loan officers get really like, okay, I got a really, it's from one of my realtors, they got perfect credit. I guess I just got to start sharpening my pencil and see if I can beat this rate. And they immediately start thinking about, can I beat the interest rate? Because otherwise I'm not going to win this deal. And that's the time where I encourage people to slow down and take control of that conversation. So what that might look like is the borrower calls you and they say, hey, I walk on water. I'm perfect. Susie asked me to give you a call and she said that you could beat my bank's rate, right? And so what I might do is say, well, that's awesome. I appreciate you giving me a call. I'm just curious, what did Susie say about me? Why did Susie recommend that you give me a call? And let them start by, kind of edifying what it was that the realtor or whomever referred it to you said about you. And then I would take over the conversation and say, well, here's what I do know. Whenever I work with Susie, she knows that I have a unique process that I take all of my borrowers through, not just to make sure that I can get them the very best rate, but that we're structuring your loan in a way that's going to give you the most benefit as far as meeting your short and your long-term goals. So you slow down and then just ask for permission. Say, so what I'd like to do is I have a handful of questions that I'd like to ask you. They're going to help me understand the very best mortgage options for you. Do you mind if I just jump into those questions? And then boom, flip the table, flip the script, and now you're in control of that conversation. Look, we're not order takers. Like, you could be an order taker. You can work in a call center. You can just pick up the phone when it rings, take people's order, give them the best price you can. And if they go somewhere else, no big deal, because the phone's going to ring 30 seconds later and you're going to do it again with another one. That's not our business. We have to go out and cultivate these relationships and get these referrals. So it's important that every one of these calls, we take control of the conversation. We consult them. And so, but sometimes you got to ask for it. You got to stop. You got to ask for permission. You got to give them a script. And I just like to say, look, the person who referred you to me because they know that I take every one of my borrowers through this process. So if you don't mind, I'm just going to jump in and ask you a handful of questions that are really going to help make sure that I'm giving you the very best options. Is that okay with you? And then take over. And so from there, I think that it's really important that we go deeper than you might think with that client, right? I want to ask them a lot of questions. And part of the reason I want to do that is because I want to, understand, are they really as golden as they think they are? So let's talk about their income. Is their income straightforward? Many people think their income is straightforward, but it turns out it's anything but straightforward, right? We know about the challenges with variable income, hourly employees who are working 36 hours a week, sometimes 50 hours a week, sometimes 32 hours a week. Like, that's different than someone who actually works 40 hours a week. And so asking those types of questions, how much do you make per hour? How many hours do you do you work? Would you say that all of your pay stubs for the last 2 months would be at 40 hours? Oh, they wouldn't be. Okay, let's talk about that. What does your W-2 look like? Do some quick math and say, okay, does your hourly wage tie out with your W-2? Is it more? Why? Is there overtime? Is it less? Why? Are you not working full 40 hours all year? The underwriter is going to look at these questions. So we can start, I don't want to say casting doubt in our customer, but it's important for them to realize that this isn't just a walk in the park. I mean, if it was that easy to get a mortgage, you wouldn't need a loan officer. But there are challenging parts of this. And the realtor who referred that deal to you expects you to uncover these challenges, if they exist, as early as possible in the process. So why not do it on that first phone call? And then I proceed the same way. I talk about their income, their debts, their cash, their down payment, where it's at, where's the money, where's it coming from, is it in your name, is it in a business name, is it a gift? Like, let's talk about these things and what the potential challenges are. what this does for your customer is it makes them realize that, okay, this is a more thorough process. There's some things I didn't think about here, and why would they? They don't do this every day like you do, but it also makes them realize that you're very forward thinking. You're going to make sure that all the potholes that could possibly exist on this journey, you know where they are, you know that they exist, and you're going to make sure that they avoid them. And so I would go really deep. And then from there, then you can get into consultation mode. Say, okay, well, I think I know what we're going to do. What I'd like to do is set up a mortgage planning strategy. I'm going to put together a few different options for you. And this is where I would leverage a tool like Mortgage Coach. I'm a huge fan of Mortgage Coach. You guys all know that. Or MBS Highway. I think they have some really great tools as well. But present them something besides a closing cost worksheet, right? Have a consultation with them. Say, look, based on what you were telling me, I know that you said you have $100,000 to put down, but I also noticed that you have $40,000 in credit card debt. Does it make sense to look at an option where you're paying off your revolving debt, putting a little bit less money down, taking mortgage insurance because your credit score is really high, so mortgage insurance won't cost that much, and let's put 10% down instead of 20% down and help pay off your debt, and your overall expenses are actually less than you're paying in rent right now. Like, that's good advice. At least it's a good option, and we should be presenting them with those options. But none of that is possible if you don't take control of the conversation with confidence and then go through and ask difficult questions. And you might say, well, Tony, this is my first conversation with them. Yes, that's what I'm saying, in your first conversation with them. And you might say, well, I don't know if that's going to work. Well, I can assure you, after doing this for 27 years, this is the conversation I have with every single borrower. And even though I don't originate loans today, I do get referrals. And when I get a referral, this is the conversation I have. Now, I might hand it off and give it to another loan officer because I don't originate loans, but I love having this conversation. You know, I love going into these sorts of details and uncovering the strengths and potential weaknesses of what this borrower has. And by having that conversation with them, it does empower you in this relationship. Now, a lot of people's natural inclination is to make the process feel super simple, right? We want to, like we think we're competing against the push button, get mortgage. So when they call, like, oh yeah, that won't be a problem, I don't see any challenge with that. Like the whole spiel is, how do I make this borrower feel like this is going to be easy as pie? And it's like, why would you do that? You know, I think you think you're doing them a service, but you want to make sure that, and I'm not saying you scare them away. Like, there's a fine line between acknowledging the challenges of obtaining a home mortgage, but also communicating in that conversation that you fully understand those challenges. If there are potential pitfalls, you're going to identify them early and then navigate them around those challenges and onto a smooth closing. Like, you can do that in a graceful way. You don't have to make it all seem like it's all super simple, because then what happens is you start getting down the road and you start coming into, oh, the underwriter said I got variable income. Oh, now I need a letter of explanation on why they're not working 40 hours a week. Or, you know, oh, I didn't realize they had this other side business that when I got their tax returns, because I needed their Schedule E for their rental property, I see that they have a basket weaving business that loses $40,000 a year. Like, because I didn't ask them enough questions up front, because we want to make it smooth and easy. Look, we have to create value in what we do. And sometimes communicating to them and at least pointing out that this can be a thorough and challenging process, it's not scaring them away, and it's not making things seem worse than they are. It's just the reality of the mortgage transaction. And I think it's important to establish that up front. And then, like I said, be a consultant to your people, just like that HVAC guy was for me, you know, making sure that he went through all the different options with me. Even sometimes the option is you don't need a new furnace. Sometimes our borrowers don't need a refinance. Like, that's okay. That's good advice if it's right for them. Now, sometimes they don't need a rate and term refinance like they thought they did, but boy, they could sure benefit from a debt consolidation loan, which maybe wasn't even on their radar because they think, well, gosh, rates are so much higher now, or whatever the case may be. That's up to us to educate them. So all I want to convey in this, you guys, is that our job as mortgage professionals is to really counsel and educate each of our clients. And that is impossible to do if you're an order taker. If they're telling you what they need and you do some math and you send them an estimate via email, you might win that deal once in a while. If maybe if your rate's really good or whatever the case may be, you might win that deal. But that's not a strategy for success. And it's also not going to get you a lot of referrals, and it's not going to help you build a deep relationship with this client and rapport with this client that's going to ensure that if you do come into bumps down the road, they're going to stick with you. So that was really my message for today, is slow down, take control, really understand your client's situation so that you can present them with really great options that are well thought out, and then present those options using some sort of technology like Mortgage Coach, like MBS Highway. Maybe you could use a spreadsheet or something else, but something more sophisticated than a fee worksheet. And I'll just close with this. Have you ever met with a financial advisor or someone who does estate planning or someone who does life insurance planning for you and your family? Have you ever met with one of those financial professionals and they did not present you with a little packet that had charts and graphs, different strategies, how much these assets would be worth over time, and what your surrender values would be, right? All this different stuff. That's the process that most financial industries take a client through. So why wouldn't you do that as a mortgage professional and really help educate them on their cost of money over time, some different strategies they can consider, and at the same time be building rapport, building trust, and building a relationship with your client. So give that some thought. Take true inventory on your process that you use today and ask yourself, could I do a better job of slowing things down and being a better consultant to my client? Until next time, you guys, thanks for your time watching Market Shares. If you get value out of this, please share it with somebody, let someone else in the mortgage industry know what we're doing over here. And of course, subscribe so that you don't miss an episode. There will be a new episode of Market Shares every Friday at 10 a.m. Pacific. And until then, take care.